Hello again. Welcome to another episode of the Uranium Market Minute. Today is Monday, July 11th, and this is episode number 150. My name is Justin Huhn. I'm your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing that you see or hear in this podcast is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right. Thank you so much for being here. I hope you all had a wonderful weekend. Looks like a pretty slow start to the week in terms of the markets. Not a whole lot happening out there in terms of volume. Relatively weak market today, leading up to the CPI numbers on Wednesday, PPI on Thursday. And of course, the market is waiting with bated breath on those numbers. I want to first thank you for supporting me in these first 150 episodes of this podcast. This has been a wonderful experience. I really do appreciate this platform, and I thank all of you for listening and for watching. Truly, from the bottom of my heart, means a lot to be able to speak with all of you about something that I care passionately about, which is nuclear energy, and of course, the uranium investing thesis. And I have a gem for you in the mailbag section, going to get into the weeds a little bit more in terms of enrichment in uranium, especially with overfeeding versus underfeeding, and what the actual nuclear fuel consultants are messaging to the nuclear industry currently in terms of enrichment availability and the implications for overfeeding. Before we do that, going to run through the charts really quickly. Like I said, not much happening there. And first of all, we'll go right into the daily scoreboard, talk about the spot price of uranium, spot and ETF flows. Spot price is down about 50 cents, $47 a pound. Quite an inactive market. Now, typically the summertime months are quite inactive, generally speaking, not only for the uranium equities, but also for the uranium industry and the spot market. Typically, there's pretty strong seasonality that happens for uranium stocks, and that's an average, of course. That doesn't happen every year. They're typically seasonally weak during the summer. Why is that? The spot market is weak seasonally, typically during the summer. Most of the nuclear utilities, fuel buyers are on vacation. They are awaiting a number of elements, which is, at least in the United States, the nuclear utilities fiscal year begins October 1. And so there's new budgets. And also there's a number of conferences that happen, nuclear fuel conferences that happen in the fall as well. You have the WNA happening in September. It's happening this year in London. And then you have NEI conference that happens a couple of months later. And a lot of decisions are made not only around that new fiscal year for the United States utilities, but also with all of the information that comes to the nuclear fuel buyers and the utilities during these conferences. So oftentimes the summertime is slow. This year, things could be a little bit different considering what's going on in the nuclear fuel markets, especially with regards to Russia's invasion of Ukraine and the implications of the West's, let's say, voluntary self-sanctioning that is happening with regards of moving away from Russian enrichment because of what is happening in the Ukraine. So that has put a lot of pressure on the enrichment conversion markets. And I'm going to talk about what we expect in the uranium markets in the mailbag section. So all of that is to say, things sometimes can be quiet in the summer. And in terms of the spot flows, we're definitely still waiting for risk to come back on across equities markets. And that includes the uranium market. So spot, no increase in pounds. They're still sitting, holding 56.9 million total pounds of uranium, 60 million in cash. And they did not raise any new money as they are still trading at a significant discount to their net asset value. Somewhere around, I think they closed around 9% discount to NAV on Friday. URA, 810,000 share redemptions. This says on Friday. That's not on Friday. This reporting, most likely share redemptions was probably on Wednesday. We saw Tuesday and Wednesday, pretty high volume selling. Now, Wednesday did mark a bottom for last week, and there was a lot of dip buying that happened that day, but we saw some redemptions reported that I mentioned on Friday, and that was most likely coming from Tuesday of last week. Either way, 810,000 shares redeemed, 10.9 million in mandated selling that happened that day. No change in outstanding shares for URNM. As we've noted repeatedly, that URNM seems to have a more stable share count, let's say, compared to URA. I think a lot of that has to do with the volatility that comes to URA due to the options actions. There's a much deeper and more liquid and more active options market for URA than there is for URNM. And that can lead to increased activity of the underlying security. Joint assets under management for the two ETFs, 2.15 billion, still down over $1 billion from the high in April of this year. From the April high, that wasn't the high for the ETFs, but that's the most recent high. That's a significant drawdown. Most of that has come from depreciation in the price of their underlying holdings, not necessarily from changes in share count. All right, sector action Friday was pretty firm, but on low volume today, we're seeing some weakness alongside the weak broad market, as I mentioned before. On that note, let's take a really quick look at the charts before jumping into the mailbag section. Starting off with URA, down almost 3.5% on the day, volume ticking up a bit over Friday. Friday was extreme low volumes for URA and for most of the sector. Really not a whole lot happening here. Volume's ticking up a bit. We're still seeing really significant positive divergence in the RSI, which I believed would have led to a short bounce. We got that short bounce Thursday and Friday of last week, pulling back now with the S&P, with most equities across most sectors today. That's likely going to be the case leading up into the CPI and PPI this week. Lacking any sector specific catalyst that could come in during the week. So most likely we are just bound to the broad markets still waiting for that volume to come in to this sector. Spot traded down significantly today, down 4.89% on the day. Uranium down a little bit as well, but definitely not down 5%. So we're probably back above that 10% discount to the net asset value for the spot vehicle, presenting a huge value proposition here. You buy the spot vehicle, you're buying pounds, probably somewhere around the $40 a pound mark. When the actual spot price is sitting at 47. This is probably 11 or 12% discount to NAV here. Historically, that is quite large. And as we know, we've been trading at a significant discount to NAV relatively consistently for the past 3 to 4 weeks. We've yet to see risk come back on to this vehicle, to this sector, and that is still what we are waiting for. Let's look briefly at Cameco. Cameco down 2.25% on the day. Very little volume for Cameco. So just kind of some nothing action, really a nothing day across the sector. Lastly, let's look at URA relative to the S&P. And this showed further underperformance today relative to the S&P. We're chopping right around that trend line. Is this going to present an undercut low? Will we see some risk coming back on in the uranium market, or at the very least outperform the S&P on a relative basis? I think that can happen when we don't see big down days, big downdrafts in the broad markets. When we see these air pockets, it tends to take everything with it. But if we have just a relatively choppy S&P, we definitely can and likely will outperform that. Thanks to the relatively strong market for the actual commodity and the unbelievably positive fundamentals that are becoming more and more well known. Okay, so for the mailbag section, you may or may not be familiar with an entity called UxC. UxC is probably the most prominent nuclear fuel consultant, and most of their clientele are the utilities, are the fuel buyers, and utilities globally pay for their premium products. That is the UX Weekly product. That is a quarterly publication that they put out that gives final, much more fine detail into their actual modeling, supply and demand modeling, their forecasting, et cetera. Our forecasting has been historically quite conservative. Now, the UX Weekly is a product that's behind a paywall, so I can't share. Excuse me, still fighting off a cold a little bit here, so bear with me. I can't share details from that product because it is behind a paywall and it is copyrighted material. However, the founder of UxC, his name is Jeff Combs. He's the owner. He's still the chairman. And Jeff, once in a while, will publish his thoughts in articles in the UX Weekly product. But he also publishes articles in a blog that is not behind the paywall. And the blog is called atompeace.org. And I'm going to link to it in the description of the video here and of the podcast in the show notes. And I highly suggest you check this out. And this article is the second article down in the blog. This was published, let's see, March 28th of this year. And a lot of what he talks about has only exacerbated since this article was published. And so I'm going to read a little bit from this article and then kind of share my thoughts on what he's saying and give a little bit more detail on that. I know that a lot of my audience here are retail investors, are folks that may not have a deep understanding of the uranium market. And I'll do my best to kind of break it down into layman's terms. I have discussed in the past the underfeeding versus overfeeding. I'll get into that a little bit here. I try not to geek out too much on this, and I highly suggest that you check out this blog post and the articles in this blog in general. Not only do you have articles from Mr. Combs, but you also have articles from Jonathan Hinz, who also is with UXC, and Jonathan will write most of the time kind of the headline article in the UX Weekly product. But even this entity that has been relatively conservative in their messaging to the market, in their forecasting, et cetera, they're really starting to kind of ring the bell in terms of what they're seeing coming down the pike for uranium. Now, in this article, when they say uranium, they're speaking about not only U3O8, but also for UF6. UF6 in the industry is known as natural uranium. And essentially, it has yet to be enriched. So though it's been converted to a gas, the uranium octoxide, the U3O8, has been converted to a gas, uranium hexafluoride, or UF6. It's still natural uranium. It has not been enriched to a higher level of the U-235 fissile isotope. That natural uranium is about 0.7% U-235. And when it gets enriched into LEU, low enriched uranium, it gets up to around that 5% level, somewhere between 3.5% to 5%, usually closer to 5%. And that really depends on the needs of the individual utility for the individual reactor that they're enriching uranium for. Okay, so let's get into this article. So I'm going to skip the first couple of paragraphs. They're kind of introductory. This is a relatively short post, but there's a lot here. Okay, so Mr. Combs states in the fourth paragraph down, and his introduction is just kind of going back to discussing articles that he's written in the past, published in the IAEE Energy Forum, et cetera, talking about enrichment and the importance of enrichment. Okay, so he states here, and by the way, this is all coming from an article that, like I mentioned, that I cannot share from the UX Weekly paid product, which has to do with kind of the history of the cycles of the price of uranium and how enrichment has influenced those. Okay, so that led to this blog. He states, I believe that the uranium enrichment link is still not well appreciated on the part of investors and perhaps even by some in the nuclear industry. Now, again, this is March of this year. So this is 3 months ago, a little bit more than 3 months ago, 3.5 months ago. So I'm going to repeat that. I believe that the uranium enrichment link is still not well appreciated on part of investors or perhaps even by some in the nuclear industry. Substitution away from uranium by utilities relying on more enrichment, which is in effect a substitution of technology for resources, was one of the reasons that the uranium price rise of 2004 to 2007 was eventually blunted. Moreover, it was a major factor behind the uranium price decline in the post-Fukushima era. So this is a very interesting point. And I think that, you know what, I'm actually going to go ahead and share my screen of this article so you guys can read along with me here. Let me do that really quickly here. All right, so here we go. This is the paragraph I just read here. I believe that uranium enrichment link is still not well appreciated. Okay, so what does he mean here? The uranium enrichment link, substitution away from uranium by utilities relying on more enrichment was one of the reasons the price rise of 04 to 07 was eventually blunted. Moreover, it was a major factor behind the uranium price decline in the post-Fukushima era. All right, so basically what he's saying is that utilities can, in many cases, seek out and buy enriched uranium straight up from an enricher and skip buying uranium or UF6. So when, like I mentioned already, when they're saying away from uranium by utilities, relying on more enrichment, they're speaking both to U3O8 and UF6. So if a utility can go straight to an enricher and buy UP, enriched uranium product, they can skip those steps. And this is something that has been going on for a long time. And to the extent that they're able to do this, they will. So when you have a condition in the market that suppresses the price of uranium, and you have a demand that is pulling back for enrichment, you have enrichers with a lot of excess capacity to enrich. Now, the enrichers, the current technology that is being used globally is a gas centrifuge enrichment. It's not, the prior technology was gas diffusion, and that was much, much more energy intensive and much more expensive. And so these centrifuges that currently spin to separate the ever so slightly different in mass isotopes between the U-235 and U-238 isotopes during the enrichment process, these centrifuges spin at very high speeds, and they essentially can't shut down, or it's very costly and difficult for these centrifuges to stop spinning. So what do they do when they have excess capacity? They have, let's say, a particular centrifuge has just produced the uranium it could for a utilities contract for EUP. And now they've seen some demand drop off. They have excess capacity. They've got a centrifuge or two up and running. They're spinning. They can now do two things. They can feed into that centrifuge less UF6 than they normally would under a contract with the utility. So let's just say they're going to load that centrifuge with more UF6 that is currently spinning for another contract with the utility. Okay, this is going to be my first example, and I'll give you another example of how this creates excess material in the market. So what they can do is essentially they've contracted with the utility to provide X amount of UF6, the feedstock for enrichment, and they've done so at an agreed upon tails assay. Now, the tails assay is the percentage of U-235 that will remain in the tails material after the enrichment process. And they contract at a certain level of tails assay. And so if capacity is lower, or excuse me, if capacity is higher, demand is lower, what they can do is they can put less UF6 into the centrifuge than they contracted with the utility. So the utility provides a certain amount at a certain tails assay. They will actually underfeed that centrifuge and spin it down to a lower tails assay. So they'll actually use that extra capacity to take a little bit more energy and a little bit more time and spin it down to a lower tails assay, which requires less feedstock to get to that. It's basically one of the greatest or kind of more classic examples of kind of an analogy for the enrichment process is squeezing oranges to create orange juice. It's been said a million times. If you already heard this analogy, I apologize for repeating it. But if you have X amount of oranges and you want to produce orange juice, and there's nobody coming up to your orange juice stand, or it's really limited traffic to your orange juice stand, you've got a huge amount of oranges. You're only going to use a certain amount of energy to squeeze lightly to get the orange juice that you need to sell it. But if there's, if you have extra capacity and you can put more effort into that squeezing process, you can use less oranges to get the same glass of orange juice. Okay, so that's underfeeding. That creates more UF6 into the market, and the enrichers can sell that UF6 back into the market, into the spot market. That's one major aspect of secondary supply that has affected this market greatly for the past 10 years. That's the underfeeding process that we are now seeing in real time switch to overfeeding. And we've had an entity from Urenco, from an enricher, state they expect that this could lead to a swing of up to 50 million pounds of uranium equivalent in a single year. So secondary supply from underfeeding has been somewhere around 20 million pounds a year. Classically, it's been a little bit less over the past year due to an increase in demand. We've seen rising SWU prices. The cost of enrichment has been rising. Demand has been rising coming from the utilities as we re-enter this new contracting cycle for uranium. Okay. So secondary supply had been falling, but now we're seeing that Urenco is saying that we could see this be as much as a 50 million pound swing. What does that mean? We could see a 20 million pound excess supply turn to 30 million pounds of demand, 50 million pound total swing. Then we've seen the guys from Segra, the guys from Sachem Cove say they expect it more to be 30 to 40 million. Either way, it's a huge swing in demand. And so the overfeeding process means the enrichers are seeing massive new demand from Western utilities. Now we're talking about the Western enrichers, and what we're talking about now is a bifurcated market. We're going to see the Russians essentially, they can still fulfill contracts to the West for the most part. There's plenty of nuclear utilities in the West that are depending on Russian deliveries of EUP in order to actually operate their reactors. So we've seen, there's actually a report that came out today, a piece of news that came out today across the Twitter sphere that Canada has made an exception to their sanction of Russian material to allow the shipment of EUP from Russia to United States. I believe it is 3 separate utilities. Okay, so that's still happening. But we're seeing big demand for the Western enrichers from the Western utilities, and that is leading to overfeeding. So what is overfeeding? It's the opposite of underfeeding. It's operating your centrifuges at a higher tails assay, so less energy, less time. You're trying to pump out the end product, the EUP, faster because demand is greater. You have to overfeed. If you're going to spin down to, let's say, 5%, 5% U-235, then you're going to need more UF6 to accomplish that and in less time. Essentially, that's what we're seeing. So more UF6 demand, that's put a pinch on the UF6 market, the conversion markets, of course. And that is a demand for more uranium on the front end. And that also is going to lead to demand for U3O8 because there's only so much UF6 sitting above ground as mobile inventory. And basically, we have heard multiple industry players basically say, there is no UF6. Okay. So the market for UF6 is extremely tight. And now we're converting as fast as we can. And that's going to put a demand on U3O8 as well. Okay. That's overfeeding. The second point of secondary supply from enrichers, and I'll finish that. I'll get back to the article. So apologize for the rambling. And if you've heard all this before, feel free to just skip to the end of the video or just end the video entirely. But this is mostly about uranium demand coming from overfeeding. Okay. So the second part of secondary supply from enrichers when there's excess capacity is actually re-enriching tails material. So whether it's when you're spinning fresh UF6 down to a lower tails assay than what you agreed upon, what you agreed to with the utility who contracted that enrichment, that's underfeeding because you need less feedstock. If you have excess capacity in a centrifuge and you're not actively spinning down fresh UF6 to fulfill the needs of a utility and create EUP on the outside as the end product of that process, then you can actually take the tails material that you spun down to, let's say, 0.2, 0.19% U-235, and you can spin it down to 0.17. You can squeeze a little bit more juice out of those orange rinds that have already been squeezed. And that is tails re-enrichment. So between tails re-enrichment and underfeeding, the enrichers have done, somewhere in the ballpark of 25 million pounds on average every year for the past decade, secondary supply into the market. Huge. That's MacArthur River and half a Cigar Lake. Okay. That is almost half of Kazakhstan's production that comes into the market as secondary supply. That starting now is gone. Okay. And not only is it gone, but the overfeeding is creating new demand to the extent of 2 cigar lakes almost. Okay. This is huge. This is absolutely huge, this shift. And I can't stress it enough. All right, let's get back to the article. So the last sentence leads to this next paragraph, right? Moreover, it was a major factor. So this switch by utilities to relying on enrichment was a major factor behind the uranium price decline in the post-Fukushima era. Once reactor demand fell off following Fukushima, the market was left with considerable excess enrichment capacity. This capacity was of the lower cost centrifuged variety, since by this time, all the energy intensive gaseous diffusion enrichment plants had been phased out. Since it is difficult for centrifuge enrichers to cut back on output, the centrifuges need to keep spinning. Enrichment prices dropped while supply availability increased, squeezing out uranium demand. Enrichment prices dropped while supply availability increased, squeezing out uranium demand. Okay, so after Fukushima, Japan shuts off all of its 54 reactors. 10% of the world's demand is shut off overnight. Japan starts selling some inventory into the market. Uranium mines that take an unbelievable amount of time and bureaucratic red tape and capital and hiring that go into production remained producing for many years after Fukushima until the price fell back down to a level where they could no longer sustain a lot of these mines. So basically, they're saying that part of the reason the price kept dropping after Fukushima was due to this excess capacity coming from enrichers. And I just explained that. So that's the secondary supply coming into the market. Okay. Very cheap SWU. SWU continued to fall basically in a straight line from Fukushima until 2018. SWU leveled out for a month or two here and there, but never, ever started to recover to the upside until 2018. Okay. So 7 years of falling SWU. Enrichment was cheap. Enrichment was cheap. UF6 was abundant. U308 demand fell off a cliff over the past decade, and that has only started to rebound. All right. So where are we at? Not only was enrichment substituted for uranium in creating enriched uranium in the first instance, but excess enrichment capacity was also used to enrich tails re-enrichment. I just described that, to create additional uranium equivalent supplies. Both developments, as well as the work off then existing uranium inventories, greatly reduced the need for newly mined uranium, and uranium prices suffered. All right. So reducing the need for newly mined uranium. This is why Paladin put Langer Heinrich on care and maintenance. This is why Cameco put McArthur River on care and maintenance, Rabbit Lake on care and maintenance. Cameco shut off all their US projects. You saw capitulation in the uranium resource market. Some of the smart companies in the space were buying up assets 2016, 2017, 2018. Finally, we're seeing a rebound here. Okay, so excess capacity led to tails re-enrichment and underfeeding from the enrichers. So you have 25 million pounds a year coming from that alone. Then you have inventories being drawn down. So you had cheap uranium that bolstered utilities inventories in the middle of the last decade. A lot of that came from Kazakhstan. This was prior to Kazatomprom being partially publicly listed. State-owned and pumping out uranium into the world as cheap as possible, making a currency play with a quickly depreciating tenge. Their labor costs were in tenge, materials costs were in tenge, and they sold it in US dollars. They did that for years and years and years. All of that is to say there was a glut of uranium in the previous decade that led to falling prices across the fuel cycle. All right. Final paragraphs are key. The uranium enrichment dynamic that was in force following Fukushima is now positioned to operate in reverse. I'm going to repeat that. The uranium enrichment dynamic that was in force following Fukushima is now positioned to operate in reverse. To the extent that utilities move away from Russian enrichment and Russian nuclear fuel in general, there is less enrichment available to substitute for uranium in the West. Okay, what does that mean? That means that right now, we are in an inflection point. Okay, what is an inflection point? This is a point in which something that has existed for a period of time, in this case, we're talking about a good part of a decade, if not slightly longer, where we've seen underfeeding and tails re-enrichment feed the market with cheap uranium. That is inflecting, that is turning. There was a good interview that Harris Kupperman, also known as Cuppy, it's pretty prevalent on Twitter, just did with Michael Gayed. And you can find that on YouTube. In fact, I will go ahead and link to that as well. And Cuppy talks about his style of investing, and he wraps it up kind of with the description of his investing as being an inflection investor. He likes to invest in sectors that are inflecting, that are shifting. And, you know, he's made a killing, just absolutely crushed it with oil call spreads. He's long uranium, long sput. And so we are in an inflection point right now. Okay. Something that has existed for a very long time is inflecting. It is shifting. That is happening under our feet right at this very moment. And the utilities are trying to figure out how exactly they're going to do, purchase uranium going forward. This is a very big deal for the nuclear fuel cycle. Continuing on, enrichment prices will rise and uranium demand will increase. Importantly, there are several components to the increase in uranium demand. One is the desire to substitute away from more expensive enrichment in the production of nuclear fuel. Another is inventory-driven demand on the part of utilities seeking to hedge against higher prices and to ensure future supply availability. This will include enriched uranium as well. Still, another is inventory buying on the part of investors who look to capitalize on uranium price increases. Okay, so this is important to understand. First of all, keep in mind, this is the founder, owner, and chairman of UXC. This is the largest nuclear fuel consultancy, and they are the largest provider of nuclear fuel cycle information to utilities globally. Enrichment prices will rise and uranium demand will increase. Okay, he's not mincing his words there, folks. Importantly, several components to increase. Okay, one, substitute away from more expensive enrichment in production of nuclear fuel. So if utility is covered in the next, let's say 2 to 3 years, and the cost of enrichment is skyrocketing currently, especially spot enrichment and spot EUP. So if they were to actually go buy enrichment, they have some UF6 and they want to go buy enrichment and they want it quickly, they're going to have to pay up for it. Okay, but they can buy long-term enrichment at a lower price. And if they can buy uranium, buy UF6, or in this case, since the UF6 market is so tight, buy U308, run it through the process in a reasonable time frame, then they can contract for enrichment out 3, 4, 5 years in the future at lower prices than they would get on the spot enrichment market or the spot EUP market. Okay, another is inventory-driven demand. So what happens when utilities see a squeeze happening in the market, they see a concern about supply going out into the future, and they aren't already covered for that future period, then what they typically will do is overbuy. They will purchase uranium greater than their needs. They will restock. Restocking cycle is part of a contracting cycle that we are just now starting. I mentioned on Friday, we're looking likely that this year we'll most likely breach 100 million pounds in U308 contracted. That'll be the first year of contracting of U308 since 2012 that we broke through 100 million pounds. All right, we're already at 70 and we're halfway through the year. So utilities, as part of this contracting cycle, as part of this tight market for UF6 and EUP and conversion and enrichment, utilities are going to restock inventories. They're going to bolster those inventories, which right now, they're not at emergency levels, okay, but they are at a historically low level. US utilities are right around the 2-year mark. EU utilities are right around the 3-year mark. Historically, that's on the low end, although it's not at emergency levels. But like I said, this is an inflection point. It doesn't mean run around like your hair is on fire and panic. It means start to take action to support the miners that need contracts at prices that work for them in order to bring that supply online, because it's becoming more and more clear that supply is absolutely needed. Okay. And then his last point, of course, is obvious to anyone who's been familiar with this channel: inventory buying on the part of investors who look to capitalize on uranium price increases. Okay. So that mostly is coming in the form of investors buying the SPUT vehicle. Why? It's highly liquid. SPUT, when they're at a premium to NAV, does go buy physical pounds in the market. So that'll most likely be the vehicle of choice for buying uranium by investors. The previous market, UPC didn't exist for the first couple of years of that market. And when they did, buying of that vehicle didn't exactly lead necessarily to buying of uranium. Sometimes it did. If they were at a decent enough premium to NAV, then they could issue shares and buy uranium. But in the previous market, uranium was held more by hedge funds. You actually had hedge funds coming in buying physical uranium. We started to see that at the beginning of last year. A lot of those hedge funds sold back to SPUT once SPUT really got rolling, got their ATM live. So in my opinion, most of this is going to go through the SPUT vehicle. But obviously, What have they purchased? 37 million pounds since August of last year. So we're coming up on a year. We've got 5 weeks into the year anniversary of the ATM for SPUT, and they're holding more than 56 million pounds. All right, final words of this article by Jeff Combs. There may be other demand drivers for higher uranium prices, especially the anticipation that Russia's invasion of Ukraine will result in a desire for more nuclear energy. But uranium demand associated with new nuclear capacity is further in the future. The exception to this would be reactor restarts or delays in announced shutdowns, while the demand effects discussed here are already taking place. Specifically, they relate to the impact that the invasion is having on nuclear fuel supplies, which are heavily impacted by enrichment supply availability. Okay, demand effects discussed here. Overfeeding, and the lack of tails re-enrichment by enrichers. Okay, that's already taking place. Uranium demand associated with new capacities further in the future. Of course, reactors that are set to come online. We're talking about major build outs by China, but China may be buying from, well, they're already buying a lot from Kazatomprom, Kazakhstan, but they might also buy excess enriched material from Russia. Okay, so that demand is not really what we're talking about here. What he mentioned here, the exception to this, reactor restarts, Japan, delays in announced shutdowns, Diablo Canyon. There's been plenty of others. There are likely to be plenty of others during this period of energy crises. While the demand effects here are already taking place. All right, final sentence of the article. The situation is even more complex than can be described in this brief article, but hopefully this highlights the uranium enrichment dynamics that are in play today. All right, so I just wanted to share that. I know I'm going really, really long here today. So if you're with me still, congratulations. I think that it's not only important to understand the dynamics of the fuel cycle when it comes to how enrichment has been purchased in the past in place of uranium, and how the nuclear fuel consultants and folks like the guys from Segra, like myself, like a lot of other bright minds on Twitter that are talking about this, are saying that demand for U3O8 is coming. It's coming. And this situation is not going away in the short term. It's probably not going away in the midterm. And we're likely to see a continued bifurcated market between Russian supply and Western supply. And the bulk of the demand is in the West. So this situation is setting up right now, which is why the UXCs and the trade techs of the world are firing the warning shots to utilities right now. They're saying this is an inflection point. This gentleman is the chairman of UXC. Like I said, UXC speaks to utilities, and they are saying, expect higher prices. The shift to demand for uranium is coming. It's coming. It's coming. Higher prices are coming, and they're saying that loud and clear. Okay, thanks for sticking with me. Sorry to be too much on the soapbox here, but I think these are really, really important elements to understand. One thing I wanted to mention, not only will I put the links to that article, and that you should check out some of the other posts on that blog as well. Also the video, the interview with Cuppy, I think he makes some just interesting investing notes, and he does speak a bit about uranium. But we are going to be having our Uranium Insider Pro webinar for members next week. We haven't decided the date. We believe that will be next Thursday. Tentatively, we have a very exciting new guest who will be joining us, and we're really, really looking forward to having this person's presence during this webinar, and his market intelligence and his insights into what he's seeing in the market, I think is going to be very, very valuable for Uranium Insider Pro members. So if you are a member, we very much look forward to seeing you there next week. I will make further announcements on that when we nail down that date and time, but most likely that is looking like next Thursday. That will be July 21st. And either way, we'll be sending you an email bulletin to solidify that date and time. If you are not a member, you're interested in joining us for this webinar, we do have quarterly options for members. You don't have to commit to a year. You can buy just a quarter membership, which would be 3 months. We have access to 3 of these members webinars, as well as all of the content we have ever created is immediately accessible to new members. And if you'd like to get a sample of the type of content we put out, previous month's newsletter, you can click the other link in the description and that will give you a download access to a previous month's newsletter. Feel free to hit us up if you have any questions about our service. These webinars are, in my opinion, a big value add for what we provide. And we go deep into the sector and try to get great guests on that help us kind of define the markets and understand really what's going on behind the curtain, really figure out how the sausage is made. And it's crucial. It's crucial to understand these things to weather these types of markets, and they continue to be volatile. So hope you're all hanging in there. Hope you enjoyed this. Thank you again. Appreciate your support for these 150 episodes. I wanted to give you something a little bit more in depth on this 150th because I do appreciate each and every one of you. All right, take care. I will see you again tomorrow. Cheers.